Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Friday, August 20th. This will be a technical analysis breakdown. So if you're somebody that uses charts within your decision-making process as a trader, or who knows, maybe you're just new to charts, interested in learning more and how they can be used to make good, solid decisions and build consistency, then this will be a video for you. And then real quick, before I get started, I do want to personally invite you to get signed up for the free live class that I'm actually offering this evening. So if you're liking what you see as I go through the video, you want to learn more about charts, how they should be used, and so on and so forth, then get signed up for the class. Now, I should also note that I do realize that this could be a little last minute for you, or maybe by the time you're watching this, everything has already happened. But still sign up regardless, or just email me, clay at claytrader.com, and I will send you a video recording of the class that will occur tonight. But yeah, if you're able to make it last second like this and you want to show up live, then definitely get signed up. But if not, again, just drop me an email and I will gladly send you a recording of the event. First stock we're looking at, ticker symbol SNOA, and I want to make a quick little point here that each one of these candlesticks and what I'll be using throughout the time of this video are 30-minute candles, meaning each one of these candlesticks represents 30 minutes of time. So just keep that in mind. But I'm also going to, on this first one, at least hop back and forth between a couple different time periods. But I want to start out on a 30-minute because as you can see here, overall, things had been going pretty well. I mean, there was this nice pattern that had formed, but then the tricky part comes within the last 30 minutes. You can see right there, the last 30 minutes has now broken down through that level. So the big question here is, all right, is the party over? And it very well may be, but it is only a 30-minute period. So you don't want to, just totally throw out the chart because, okay, well, it broke down, which is true, but you want to give things a little bit more potential opportunity, and that's where I'm going to change here to the daily time frame because the daily really brings about an interesting scenario here. So again, this now meaning daily represents what's happened today in its entirety. And yes, as you just saw, the last 30 minutes did break down. But look what we have down here. We have the very well-known, the very famous 200-day moving average, which sits right there at, let's just call it $7.50. So the question mark that I have moving forward into Friday and the next week is maybe the price just panics a little bit more, finds some support, and then get some sort of bounce off that 750 area. Is that guaranteed to happen? Absolutely not. But the point of charts is not to guarantee anything because there are no guarantees in the market. But from a rational decision-making process, from a not random decision-making process, there is nothing random about $7.50. It makes a whole lot of sense to pay attention to that, and we'll see if the price can come down to that. And if it does, maybe, just maybe, that's the back test point where it gets some sort of bounce back to the upside. But who knows? Maybe that last 30 minutes was a leading indicator that this thing's just going to keep on crashing. So that's always a possibility too. But my core point here is as we go back to the 30-minute, I wouldn't totally abandon ship on it just because of that late day breakdown, because as you just saw in the daily time frame, there is still that very interesting area around 750. So Friday setting up to be, I think, a very, very a solid day in a sense of, okay, there could be a good quality bounce, but we'll have to see how it all plays out. Next one here, ticker symbol SONN, and the same exact premise that we just talked about, so I'm not going to spend nearly as much time. Again, these are 30 minutes. So not in this situation, the only difference being it's not a 30-minute period. It's actually an hour period, right? Because if this is one 30-minute candle and then the next 30-minute, and you add those up, that would be 1 hour. So final hour of the day, big pullback. So like I was just saying, maybe this is the beginning of the end. Maybe this thing is going to completely roll back over. But what makes this interesting is you have both of these moving averages basically on top of one another. Again, pink line being the 200-period moving average, purple line being the 50-period moving average. And let's just call them both around the $1.05 mark. So does this thing panic a little bit more, find some support and head back up? Again, not guaranteed to happen, but is that a rational, is that a very realistic possibility? Absolutely it is, because those can be very solid areas of support. But as always, risk management matters. It could go down there and crash right through there. But again, same exact general context. Late day, things are looking pretty shaky, but the price is approaching some very interesting levels of support. So we'll see if they can get the bounce or not. Next one here, ticker symbol AMC. And overall, the chart is hanging in there, but there's certainly a red flag that needs to be at least monitored and ensure that it doesn't spin out of control. And for those of you that have watched the past videos, you probably know what I'm going to talk about here. But up until today, that trend line right there had been doing a fantastic job of just showing that, yeah, the price was trending in the upwards direction. But today, with the price actually breaking down through it and then continue to the downside, again, does that mean that the entire chart's destroyed? I'm not saying that. Is it a red flag in the sense of, okay, maybe the chart isn't as strong as as what it was once appearing? Yeah, it absolutely is. But to be fair, and why, again, I'm not saying that it's means that the entire chart's destroyed, is maybe this is just a temporary breakdown. Maybe the price is going to regain its footing and get back upwards. But as of right now, you got to respect the fact that, okay, the bears have shown enough strength to not only push down through that trend line, but then continue to push the price further and further, which is where, the next key level of support comes into play. So I'm going to go ahead and get rid of that as it served its purpose for now. But the next level to watch very closely, let's change that actually, is going to be down here at $32.75, which was a former area of support down here. So if the price comes down to $32.75 and then pushes down through there, at that point, is the chart destroyed? I'm not going to say that, but things would definitely start to look shaky, with the chart looking even more shaky if somehow the price actually gets down below the 31.85 mark. Again, not saying that that'll happen, but in my opinion, those are two very important levels of support. With any sort of attempted bounce back to the upside, key level of resistance to watch is going to be that purple line there, the 50 period, as I've said before, and that is valid at, we'll just call it the $36 mark. But yeah, as of now, things are looking a little shaky, but we'll see if the price can get recovered or not on Friday. Next one here, ticker symbol M for Macy's, and overall, very, very solid day. Big volume came pouring in, nice move to the upside. And what's nice about this move is that you no longer have to worry about chasing, right? You don't have to worry about, okay, am I buying the top? Am I suffering from FOMO, fear of missing out? Now, some people already did, right? Some people did buy at those highs, and they're pretty nervous right now. But assuming you're not in, then no, that has been eliminated because the price has pulled back. And now, just because it's pulled back doesn't guarantee anything other than the fact of, well, at least you're not totally buying at some sort of top, and you can get, a little bit more favorable risk-reward scenarios. But the level of support that stands out to me moving forward is going to be right there around $21.15. So if the price can pull back there, once again, you can see that it's already bounced from that area up twice. So that doesn't guarantee that it's going to bounce from there again. But again, it's a valid thought to have, right? It's already happened 2 times. So it's rational to think that it could happen again. Not guaranteed to happen again, but by no means is that some sort of random area. And again, that's what charts are helping us do. Make and avoid, or help us avoid random decisions. So 21.15 going to be an interesting level. If that area doesn't quite hold up, next level of support would then be down there right around the 20.75 mark. In terms of areas of resistance, party essentially stopped right up there around the 22.15 mark. So keep an eye on 22.15 as that'll be the next battleground. But overall, good solid move. Next one here, ticker symbol TSLA, Tesla. And overall, a disappointing day after a very strong late day on Tuesday, and then a very strong Wednesday, and then today pulled back. Now, it's not like the price crashed, but the level that I think a whole lot of traders, longs and shorts, and everybody in between is going to be watching, certainly myself, is going to be this area right here around the 668 mark. That is one of those areas where if the price does come down there and break through there, it puts it into kind of this just general territory here where there aren't any, really kind of straightforward areas of support. So while I'm not saying that this is what would happen, I don't think it's unreasonable to think that if that area cannot hold, the price could, find itself drifting back down to right around that 652 range, which is where it bottomed out previously. Again, not saying that if it breaks that level, it's dropping straight down there. But like I said, just looking back here, there just really aren't any sort of, major areas of support that stand out. So that'll be, 2 key levels there from the support side of things. In terms of areas of resistance, the main level to watch initially here is going to be that purple line right there. As I've said, the 50 period moving average. Check it out. Rejected by it. And then final time this afternoon, rejected by it. So that doesn't mean that it can't be broken, but it's very clear that that 50 period moving average is certainly a big thorn in the side of the chart right now. Current value of that is right there at 677. So keep an eye on that. But overall, yeah, a disappointing day for Tesla, but still one day left on the week. So we'll see if the price can try to get recovered back to the upside. Next one here, ticker symbol PLTR, and a disappointing day on this one because it had broken up above that $25 mark as I talked about previously. So it would have been a fantastic sign if the price could have stayed up above there. But as of now, it looks like that was just completely a false breakout. Yeah, the price got above it. Yeah, the price stayed above it for a while, but then mid-afternoon fell below it. And then the last 30 minutes, absolutely brutal right there as the price continued to pull back. Now, that's not to say that the price will never, ever get back up above the $25 mark. But just from a technical point of view, that was a very significant area. Got the breakout through there, but then today has now drifted back below there. So from that angle of things, that's going to just go right back to being considered an area of resistance now. And again, that's just, good old classic rule of supports will now tend to act as resistance. So with any sort of attempted bounce back to the upside, I unfortunately, like I said, just look right back to 25, probably being relatively stubborn. In terms of areas of support, whole lot of downwards momentum showed up during that last 30 minutes, which doesn't guarantee anything. But at this point, I don't think anybody would be shocked to see if the price goes down and revisits this 2370 mark. If 2370 does not hold up, then a very important level would be that pink line there, the 200 period moving average, currently valid at we'll call it 23.25. Yeah, overall, not a good day. Next one here, down in the world of penny stocks, RGBP, and this will mean a little bit more to those of you that have watched past videos, but we've been tracking that resistance line right there. But today finally got just a beautiful breakout, so broke out through there and then never really looked back as the prices continued to break out to the upside. But overall, just a classic. Let me just draw this very crudely. Just a nice bullish wedge right there, and like I said, just got the breakout from it today. So a whole lot of updates here need to be made. And one of the newest areas of support that I would say, would make this chart look the best moving forward. So if the price falls below, it doesn't mean the chart's ruined or destroyed. But if the price can now begin to stay above the 3-cent area, that would be a great sign and give this an overall very, very healthy looking consolidation. Again, if the price falls below 3, not the end of the world, because the price does still have plenty of wiggle room to stay above that 50-period moving average. But as far as, what would make the chart look the absolute best, to me, staying above 3 would be, would answer that question. And then as far as areas of resistance are concerned, yeah, is this at, all right, never mind. I take that back. So we're going way back into the chart's history. But the next level, or is the price up above it? No, it's doing battle with it right now. But as you can see, way back here, the price got up as high as 0.034, we'll call it. So I'll change that to red to represent resistance. But that's essentially right where the price struggled today, right around there, which makes sense when you consider that that's where it got rejected several weeks ago. But moral of the story here, big movement to the upside, big breakout, and now it's just a question of can the breakout continue into Friday? We'll see what happens. We're staying down in the world of penny stocks here with WDLF. Monster move today. Volume over 1 billion shares. And then, of course, you see the price action there. Very, very impressive. So from, a liquidity standpoint, from a price action standpoint, if you're into penny stocks, and this is one that I would say makes a whole lot of sense to keep an eye on. But as of now, the price has made a pretty big move up. So you always got to, question to make sure that you're not chasing the price because you don't want to, suffer from FOMO. So if you're somebody that's like, yeah, I prefer to play pullbacks, to me, 008 looks like a very interesting pullback point. And, of course, not saying this will occur, but if the price came down here, stayed above 008, and then just, kind of chopped around in that area, at that point, I'm just kind of speculating here. But generally speaking, you'd have a very nice, and put the golf hole down there to make it more visual, you'd have a very nice bull pennant pattern. So that's why I say 008, I realize that would cause the price to pull back some, but there's a big difference between a pullback and a reversal. Just because the price starts to go down doesn't mean it's a reversal. It could just very well be a pullback, case in point right there. Check out that very healthy pullback, and then the results of that you can see right there. So same premise here. Now, if you're somebody that likes to play momentum breakouts, maybe you're saying, well, Clay, I just want to see it break those highs and I'm going in. Hey, no problem there at all. Again, that's just a matter of personal risk tolerance and strategy. But for me, I think, seeing some sort of pullback would make this a little bit more, less risk. But like I said, that could also be risky in the sense of, well, you just miss out on a trade that continues to boom to the upside. So that's why it always comes down to your personal risk tolerance and strategy. Next one here, ticker symbol WISH. And overall, rough day today because, yes, the price had formed a very, appeared to be a solid area of support right there to right around 670. But then this morning, you can see the price broke down there, below there, and just continued to drift to the downside. So from that angle of things, a very bearish movement. And moving forward, really, it seems as though the main area of resistance, so now watch, is all going to be about the 50-period moving average. In fact, you can see that's right where it got hit late day on Wednesday. And isn't that crazy? Again, our charts, is technical analysis perfect? Nothing's perfect. But what a coincidence, right where the price happened to get rejected, right at that moving average back to the downside. So point being, moving forward, if there are any sort of attempted more bounces to the upside, keep a close eye on that 50-period moving average currently valued at 675. And then as far as areas of support are concerned, nothing fancy, nothing complicated at all. Literally just a question of, okay, well, where did the bleeding finally stop today? And that was at 615. So 615 will be the main area of support for that reason alone. But we'll see how it goes on Friday. Next one here, ticker symbol ENSC. And this is kind of I don't want to say all in because I don't mean it in a portfolio sense, but just kind of this thing's got to hold strong. So this thing is either a pullback or it's not, or it's a crash. And the level that's going to help us answer that is right there at $3.50. So in other words, this thing is either truly the start of something much nastier, where basically a pumping up, right? The pump, and then it's just going to keep on dumping tomorrow. Totally possible, which is why risk management matters, which is why stop losses matter. But to be fair, maybe this is just some sort of overblown pullback. It's going to consolidate out and then start to turn itself back around. But my personal line in the sand would be $3.50, because if the price does come down to $3.50 and then breaks down below it, think about what that would be doing. That would literally be putting the price right back to where it was before the breakout. And I mean, not to insult your intelligence, but price movements that go back to where they were, not exactly a sign of sign of strength or true power or anything like that. So 350, like I said, that's going to be the line in the sand. This thing is either a pullback that's going to recover, or it's just the start of it's going to keep on dumping. And with 350 there, it is what it is. So if that kind of fits your pullback play and risk versus reward scenarios, then it's a very, very interesting setup in that regard. Because these things, if this is fake, and if you've been around long enough, I'm sure you've seen moves like this come, and then all of a sudden the price just snaps right back up. So while it's certainly not guaranteed, hey, it could happen. But as always, risk management matters most. So that wraps up the top 10 here. But again, just want to personally invite you that if you liked what you saw, you want to learn more about using charts as a tool to build consistency and make good decisions, then the class is this evening, Thursday, August 19th at 7 p.m. Eastern time. Again, Eastern. But like I said, if it's too last minute, or if you missed it, but you still do want to watch the recording of the live event, then just email me, clay@claytrader.com, and I would be happy to send that recording to you. As far as the top 10 videos are concerned, if you enjoy this format, if you like the way I have these structured, then please communicate that to me by doing two very easy things. Hit the like button, leave a basic comment down below. It could be hi, it could be a thumbs up emoji, it could be anything. But in order for me to just know whether or not it's even worth the time and effort to continue to do these, I'm always looking for feedback. So if it is worth my time, if it is worth the effort because you find these helpful, then like I said, just communicate that to me, hit the like button, and leave a very basic comment down below. And again, if you're interested in learning more about all of this, then get signed up for the class or email me, clay@claytrader.com, and I'll send you a live recording of the class. Everybody take care. Have a good one.